Good morning, listeners. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 28th September 2020 in the international market. In the US market, the bond rates for 10 and 30-year bonds have been falling consistently for the past 3 out of 4 weeks on account of spike in COVID-19 cases and uncertainty over fiscal stimulus. On Friday, the US 10-year closed at 0.66 percentage points and 30-year at 1.4 percentage points. US 10-year benchmark range seems to be 0.66 to 0.69 for today. In the crude oil market, no major market moving news in crude, and crude is trading stable at $41.77 per barrel. Our view is still neutral, and as we have been saying, we are long-term positive with a $50 target in 3 to 6 months. In the currency market, dollar index is trading at 94.52. Once again, the dollar has breached our target of 94.46, and the next target now seems to be 94.80. Today's dollar range would be 94.26 to 94.72. USD CNY or Chinese yuan is trading at 6.82 percentage points. With rising COVID-19 cases in Europe, dollar is again becoming traders' favorite, and dollar momentum is seen. On Friday, Indian rupee closed at 73.70 with a high of 73.91. Today's USD INR range is 73.62 to 74.06, but the exit range will be available once the market opens. Now, important segment of today's discussion, domestic market. The much awaited borrowing calendar can be announced today. Let's try to decipher last time the borrowing so far. In the first half of the year, the center had planned to borrow rupees 6.98 lakh crore, and it has actually borrowed rupees 7.66 lakh crore. I repeat, with a planned borrowing of 6.98 lakh crore, it has actually borrowed 7.66 lakh crore. Talking about states on the other hand have planned to borrow rupees 3.05 lakh crore versus they have actually borrowed rupees 3.25 lakh crore. I repeat, states planned borrowing 3.05 lakh crore versus actual borrowing is 3.25 lakh crore. In short, both center and states combined, the planned borrowing for first half of the year was rupees 10 lakh crore and the actual borrowing has been 10.09 lakh crore. So not much deviation, but that is in no COVID scenario. Now, GST shortfall has been rupees 20,000 crore, approximately rupees 20,000 crore a month, translating to 2.5 lakh crore shortfall in revenue. For the second half of the year, the center is expected to borrow rupees 6 lakh crore instead of rupees 5 lakh crore from the previous assumption. So the additional borrowing will come for sure. The question is whether the RBI decides to borrow now or later in the last quarter, assessing full COVID impact. On the contrary, states will need to borrow a mammoth rupees 6.25 lakh crore in the second half, which will be almost double than that of the first half. Hence, we are of the view that instead of buying SDLs now, we can wait for increasing our SDL allocations once the borrowing becomes clear. We clearly envision SDLs trading above 7% anytime soon, if not in the next 1 month, then certainly in the next 3 to 5 months. Much has been communicated by RBI via OMOs and auctions and defaultment, but that, my dear listeners, is a topic for different day. We are awaiting RBI's stance on additional borrowings and OMO support to keep the yields in check. Very important point for today. We have spoken a lot and majority of the clients are out waiting on sidelines. We repeat, last chance to square off all your risky trades today before the October-March borrowing calendar. This event risk is not worth taking. One more point. Do you know that states in tomorrow's auctions will borrow mammoth rupees 25,437 crores? After today's borrowing calendar, tomorrow's state auctions will be a key challenge.